Hi, I'm Jenny Brown. Welcome to this week's MFB News. I hope you are incredibly well. I've not been around for the last couple of weeks. I've been holidaying in France, which was lovely, by the way. So I hope everybody's been keeping really well. So what have we got for you this week? So we're going to do an update on what's been happening with the lenders. Having missed a couple of weeks, and obviously during that period of time, we've had a whopping 0.5% base rate increase. Things have moved on yet again, so I'm just going to be updating you as to what's been going on there. We've got a little bit of criteria change that we're going to talk about, and then lastly, with the newest data that's been released from the ONS on house prices, we're going to cover off what's been going on there and also talk about the revised predictions for house price growth over the coming 12 to 18 months. Okay, so mortgage movement among the market. So what I'm not going to do is cover off all the changes for the last 2 weeks because that would be really boring. We know that base rate went up by 0.5% a couple of weeks ago. What that has meant is that it's sparked another flurry of activity in terms of lenders repricing and also people submitting mortgage applications. So as an example, yesterday was my first day back in the office. Paragon had released for a short period of time a very nice exclusive limited edition product, a 5-year fixed rate that got withdrawn. So as a business, we submitted around 40 applications just yesterday on that one particular product. So it's kind of very, very pressurized at the moment, not just for us actually, but for the lenders as well, and also, you know, for you guys as borrowers. So not the greatest situation, but we are where we are. Now, in terms of lender pricing movements, so look, a few examples of what's been going on first of all. So we've seen NatWest increase their rates by 0.1%, so their pricing now starts from 3.24. Accord have adjusted all of their rates by 0.5%, so their fixed rates are now starting from 3.85. The Coventry, who actually stepped out of the buy-to-let market for a very short period of time, they just withdrew all of their products, had a quick breather and have come back in. They've now bought in 16 products and their pricing starts from 3.4%. I can't explain to you how much I like dealing with the Coventry. They're very, very black and white in terms of their appetite to lend. They only lend to individuals, no limited companies, no HMOs, no multi-units. But what they do really, really well. No minimum income requirement. They can lend to older applicants. You can have up to 10 mortgage properties in the background, which does scoop up actually most landlords. But actually, if you've got properties in your limited company, they don't incorporate that within the allowance of 10 properties in the background. Most lenders would do, they don't. So they've got loads of great things. So I'm really pleased to actually see them come back to market. When I saw them step away, I did have a bit of a panic, but they're back now, so that's really good. We've seen the Clydesdale increase their rate by 0.11%. Their rates are now from 3.4. We've seen Hampshire Trust Bank increase their rates by 0.5%. Now, Hampshire Trust are a specialist lender. Where I would say they excel is really for very complex limited company or buy-to-let deals, sorry. So when I say limited company, they can do complex structures, so layered companies. If someone is overseas, they can do foreign nationals, non-UK resident, as an example of how racy they can kind of go. They're also good at really large HMOs, large blocks of flats. The pricing is reflective. You're not talking about high street kind of pricing. You're not even talking about specialist buy-to-let pricing, but they are a fantastic option if you've got something that's a bit more quirky. Now, we've seen TSB reintroduce 5-year fixed rates. Again, they had pulled a bunch of those off while they sorted out their pricing. So their rates here start from 3.99%. Platform Home Loans, another lender who stepped away from lending for a short hiatus. They're back in now, they've got new rates out. And West One have made some adjustments to their pricing, so their rates are now starting from 4.59%. So where are we in terms of rates? So look, if you're looking to borrow in your personal name on a relatively straightforward property, then you're looking at variable rates from 2.4%. 2-year fixed rates from 2.69, 5-year fixed rates from 3.1, and 10-year fixed from 3.79%. Limited company rates, so variable rates are starting from 2.59, 2 years from 3.49, 5 years from 4.29%, and 10-year fixed from 4.04. And yeah, that isn't me getting my numbers jumbled up. You can take a 10-year fixed rate of 4.04, which is lower than the lowest 5-year fixed rate of 4.29. It's a limited edition product that's been bought out, which is really, really good. If you want more details on that, do give us a shout. It's really interesting. Over the last few years, because of interest rates being so incredibly low, because of the beneficial rental calculation, we've literally been doing probably 95% of the lending that we do on 5-year fixed rates. things have certainly moved on at the moment. So we're still doing lots and lots of lending on 5-year fixed rates, but actually more people are definitely turning their attentions towards 10-year fixes. If you can borrow in a limited company on 10-year money at 4.04, which is 0.15% cheaper than the lowest 5-year fix, it's got to be worth considering at the moment. Actually, interestingly, what we're also seeing is more people now looking to variable rate mortgages. Some people are kind of quite bullish in terms of their thoughts on what's going to happen with base rate. They're not expecting it to really go up too much more. I think the general prediction across the industry is maybe 3% by the end of 2023. So actually some people are saying, well, you know, if I can take a variable rate from 2.59%, but a 5-year fix is 4.29, I'm willing to actually, you know, take my chances on that. I think I might actually do better on a variable rate. So that's where we are at the moment. So lots more changes, and I'm sure that isn't the end of it. We're also still seeing flurries of lenders pulling rates. It's very high octane at the moment. A lender announces a rate withdrawal. Generally, it's on the same day, later on that day by close of business. So then brokers, and it's not just us, this is, you know, the case across the whole piece, are scrabbling around trying to get applications submitted. The lenders get a wave of applications come in. They get super busy. They fall behind. So the service standards are also quite slow at the moment. So if you are in need of a mortgage quickly, what I would absolutely suggest that you do is not just go for the cheapest interest rate on the market. Well, by all means do, but actually just be mindful of the lender turnaround times. Some lenders are taking up to a month before they look at a bit of paper that we send in. So we're submitting an application. They're saying, well, okay, you know, we need this, this, and this document. We send it in. It's a month for them to look at it. Then they look at it, and then it's a situation where they say, well, actually, we're now going to need this bit of information as well. So when we send it another month, so you can see how things become very, very protracted very, very quickly. Now, there are also lenders who are working to timeframes which are very acceptable, 2 or 3 days. But the key message here is that if you need to act quickly, you need to be very selective about which lenders you're going to work with going forward. So do give us a call. We'll be able to talk that through with you, no problem. Okay, now a little bit of lending criteria change from BM Solutions. And BM Solutions don't really change their criteria very often. You know, they've kind of, they've been around for a really long time. I mean, I've been at Mortgages for Business for I think 15 years now, and BM Solutions lending criteria hasn't really changed that much during that period of time. So when they do make a change, it's actually quite interesting. And what they have done is they have reduced the minimum age at application down from 25 years to 21 years. Now, this is an interesting one about ages, actually. So people would just assume that because you can legally contract from the age of 18, you can get a buy-to-let mortgage. But actually, a lot of lenders have a minimum age of either 21 and in some cases 25. So it's really interesting that BM Solutions have brought that down. Why is that? You know, I don't know is the honest answer. I guess they're probably looking at their mortgage book and thinking, well, hang on a minute, you know, all these borrowers at 25 years of age who aren't defaulting, maybe we consider something lower. I think also there may be a situation where there is a concern from lenders. Lenders are always going to be worried about lending to someone where they feel that they may actually not be doing they'll be buying the property as a buy-to-let, but their intention is to move into it. And generally speaking, at 21 years of age, most people haven't bought their first home. By 25 years of age, a lot of people have actually made their first step onto the housing ladder. So it could be linked into that somehow. But yeah, so 21 years of age is now the minimum with BM Solutions. And what they've interestingly done as well is they're saying that actually first-time buyers can apply for a buy-to-let mortgage if at least one other applicant also owns a buy-to-let property, which kind of ties into what I'm just saying. So previously, they would not accept any first-time buyers on the mortgage application. Everybody had to own a property already. Now what they're saying is actually, if one of you is a first-time buyer, that's fine as long as, you know, someone else is not. So interesting to see a change like that from BM Solutions. I think we're going to be seeing more lender criteria changes coming in over the coming months as they really start to reconsider their lending proposition. Obviously pricing, they're not going to be able to win wars on pricing as much as they have been able to do, so they're going to be able to lean on criteria instead to bring in new business. House prices. I think this is the thing we get asked about the most, actually, interestingly. There's two things we get asked all the time at the moment. What's going to happen to interest rates and what's going to happen to house prices? So here you are in terms of what is the latest reporting. So the average house price in the UK increased by 7.8% in the year to June 22, which is down from 12.8% in the year to May 22. And this is according to the latest data from the ONS. So looking across the nations, the average house price in Scotland increased by 11.6% over the year to June, unchanged from an increase of 11.6% in the year to May. The average house price in Scotland now stands at a record level at £192,000. So what they're saying here essentially is that actually between May and June there's been no change to house prices or house price growth in Scotland. In Wales, the average house price increased by 8.6% over the year, which is down from an increase of 14.1% in the year to May. So the average house price in Wales is now a record level of £213,000. The average house price in England increased by 7.3% over the year, down from an increase of 13% in the year to May. The average house price in England is now at a record level at £305,000. Northern Ireland, similar story, increases there by 9.6%, and their average house price now stands also at £169,000. So things have still been going up, albeit a lot more slowly. Now, more importantly, the million-dollar question about what's actually going to happen coming up. And last week, Mortgages for Business, in our weekly newsletter that we send out to everyone that subscribed to it, we sent out an article which really covered this off. But for those of you who don't subscribe to the newsletter, I thought it was such an interesting piece actually, that I wanted to share some of the data from there. So the senior UK economist at Pantheon Macroeconomics expects to see sold house prices drop by approximately 2% in the second half of this year. Leading estate agent Knight Frank has similar predictions, with expectations of price growth to remain high but drop slightly by the end of the year. They're saying that although the latest annual house price growth remains above 10%, they anticipate this returning to single digits by the end of the year. However, Knight Frank has increased their annual growth predictions from 8% to 5% as it becomes clear that house prices are not going to drop off as quickly as previously anticipated. Now, looking forward to 2023, Pantheon are predicting house prices to increase by a further 2.5%. They do caveat this by saying, but only if the Bank of England halts their base rate increases. So I think what they're saying is actually that if we keep on going up 0.5%, then actually that number could come right down. Knight Frank maintain that over the next 5 years, UK property prices will increase by an average of 16.9%, which is obviously will come as welcome news to property investors. Obviously, we don't want to see our assets drop in value. However, some investors are also waiting for house prices to fall off a cliff before they go out and buy something. A lot of investors have actually been incredibly patient over the last 12 to 18 months. Obviously, we had COVID, which made buying a house really, really difficult. Then we had the stamp duty holiday and a bunch of people suddenly wanting to move house, which really put the housing market into meltdown. So things got really, really busy. Gazumping came back in. The housing market got really, really fraught. So a lot of investors just kind of said, you know what, I'm going to just stand out for now because, you know, quite frankly, I think the market's running really super hot. Since then, the market has cooled down, but because of the lack of supply to the market, house prices have kept on going up. So some investors have been sort of just really waiting for things to settle down. And we are actually, quite interestingly, starting to see an increase in the number of people, of purchase inquiries coming through, which to some people would feel counterintuitive given everything that's going on. But actually some landlords are saying that, you know, yes, mortgage rates are going up, but actually rents are also going up. So this is kind of balancing the two things out. So I'm quite happy to carry on investing. I've not done anything for quite a while now. You know, I feel like the time is right. So that's what's going in the housing market. There's your predictions. So in summary, house prices continue to go up. We are expecting the rate of growth to really slow towards the end of this year. Slow increase in growth over the next 5 years, but a growth figure nonetheless. And that is me done for this week. Thank you, as always, for having a watch or listen, however you choose to digest this. If you do have any questions, we'd love to hear from you. 0345 345 6788, or have a look at our website, mortgagesforbusiness.co.uk. Once again, just a kind of reminder, in terms of the expectations, there's a lot of chatter about base rate going up by a further 0.5% in September. When you take a mortgage out, you can actually secure a mortgage offer for up to 6 months in advance of completion. So that means that if you're looking at a remortgage, you could apply for a mortgage now. Let's just say it takes a month to get you the offer. So that would take you to the middle of September. 3 months on from then, so that's into April next year. So actually, if you have a remortgage coming up any time between now and the end of April next year, I cannot encourage you enough to have a look at that. Do give us a call. Have a great weekend. I'll catch you again same time next week.